Uh, you clicked on another one of my videos. Welcome, my boys, to LGM Notes. This is where I'm going to be breaking y'all boys down into trading, how to be the best of yourselves, and all of that hitty jitty stuff. You get what I'm saying? But yeah, today we're going to be talking about technical analysis. So let's get into it. What is technical analysis? First off, that is you're technically analyzing the market. That's all it stands for. You're just analyzing what's going on in the market. Now, if you already are watching this, right? If you're learning about technical analysis, you should already know market structure. You should already know the liquidity. You just don't know how to apply it. And I'm going to show you guys how to apply it right now. All right. So, first off, here, this was a trade that I took, when this was yesterday. I took this trade yesterday. Let's go to, I'm pretty sure I posted this screenshot in my Discord server. Let's go to the Discord and let's see if we sent that screenshot. Yep, here we go right here. No, I didn't take this exact trade. The trade that I took was, I caught the trade when the market first opened up. I caught this trade when the market opened up. Caught it up here like that. That was the trade I caught. But I also did catch this one. I sent it to my student Andy. Shout out to Andy. Let's explain and go over how to analyze the chart. Okay, so if we go back to the left side, we go to a higher time frame, 1 hour. What do we see here? Okay, we see that we have accumulation on this hourly time frame, right? Have accumulation. And what do we have right here? We sweep out this form of liquidity over here. This liquidity gets swept out, right? Liquidity right here gets swept out. This is going to be our manipulation. Once we manipulate right here, what do we continue to do overnight? We continue to climb overnight, okay? Overnight, we continue to make us a market. We have a market structure shift or a breakage structure. First off, we have a breakage structure here. Breakage structure just like that, which is cool, perfect. This is what we need to know. This we analyzing, right? We see that we have a breakage structure creating us a new trend, and we are creating a uptrend right now, a uptrend. We are going up in the market. So knowing that, we know, okay, if we're going up in the market, we should be looking for buys. That was my mindset when I seen this. When I took this first trade right here, what did I, as you can see over here on this line over here, what did I have? I had this line showing that we had a market structure shift. I entered in on these orders over here because liquidity is sitting. We're going to get into all that later, but liquidity is sitting over there. So I seen that we had a breaker structure. Let's go back to, what's the name? Had a breaker structure here, and I entered in at this level down here, aiming for these highs, okay? But this other trade, okay, let's go to the 5 minute. What do we have here? On the 5 minute, what do we create? We create a high on New York session, and we create a low. This low shows us that it's just sweeping liquidity right here. Liquidity is being swept. The reason I say that is because we didn't stay at this low, right? This was a news candle. 9 times out of 10, if it's a news candle like this and we sweep liquidity like that, we want to just grab liquidity and continue higher, and that is what we did. Seeing this, that we didn't close, this candle didn't close below this low, but we swept this low. That's a liquidity sweep for me, okay? All liquidity is, I'm going to explain it really simple to y'all, is coming down to key areas in the market. So we have this low right here. This is where liquidity resides. Liquidity also resides down here. It's basically where the market is attracted to. Previous swing lows and swing highs is where liquidity is. This is a swing low. This is a swing low. This is a swing high. This is a swing high up here as well, right? So we seen that liquidity is sitting there. It's down here. It swept that low. Okay, boom. Now, this is where most traders mess up when they are technically analyzing stuff. Most traders will try to buy in here, just trying to find random spots to buy in. When you are analyzing the market, wait for confirmations, okay? That will set you apart from other traders, okay? Because most traders will try to bottom tick this trade right here. They'll try to buy. Is it? I don't think that's an SMT. No, it's not an SMT. Well, kinda. Yes, it is. It'll be an SMT right here. This would be it. But that's besides the point. Most traders would try to bottom tick this trade or try to like get in down here or try, you know what I'm saying? No. you're a smart trader, so you're going to wait for the market to give you a sign that we are going to go up, because we could have continued down here, right? We had a sweep of liquidity. I also took this trade right here where we sweep liquidity right here. I knew that we were going to try to come fill this candle, so I see we sweep liquidity right here. I have my entry right here at this point, aiming for these lows, just like that. Boom. And what we do, we came through and that was another trade that I took. But that's because I already knew this wick was going to get filled. Usually this wick gets filled and then we're going to push up. Besides the point though. Okay. On the 5 minute, what do we have here? We have a break of structure. This candle right here, we had closed above these previous highs. And pretty strongly at that. So after I seen that, I'm like, okay, we have a break of structure. We also were pushing up. We were in the uptrend earlier. I want to see these highs get taken, if not more, right here, right? If not more. So I put my entry right above these highs and my stop loss here. And this is how this trade played out. We go back in time. Go to 1 minute. We go back in time right here. Dang, can I move over? See that we respected this order block right here. But we created a 5 minute fair value gap, and we also a 1 minute fair value gap. This is a BPR right here. That means balance range. We balanced the range right here. This is a balanced range as well, but we broke through that, so we're not even gonna worry about that. We're gonna get in at these lows, right? Buy in here, put my stop loss here, risking $500 to make 2,000 buckaroos, right? This is our trade. Okay, I just explained to you why. Why did we take this trade? We break a structure. Liquidity swept at these lows. Where are we aiming for? These eyes up here. If you're not comfortable with taking this trade all the way up there, you could take this trade at the top of this week or right here, wherever it's at. You're still making a decent amount of money, right? Just wherever you are comfortable. I had my high sitting here. I had it sitting up here because more than likely after one high was created and after one high is already created, how the market moves, it moves in a staircase pattern. So it goes like this. Market moves in the staircase pattern. So what it's going to do is going to go, oh, no, that don't work. It's going to go up like this, come down like right here, push up higher, right? That's how the market moves. It goes up, comes down, goes up higher, come down, goes up higher, like that. That's how the market moves. So once we created the high already, we come down, dip into these levels over here, like we just seen. What do we have here? We have a break of structure here, right? We can look for a retest right here. This is where the retest of this break of structure is, right? And we enter at that retest when we come back right here, aiming for these highs, like that. That's the trade that we took just right here. You feel me? We created a higher low, not really high, extremely higher, but we created a higher low here. We just were ranging in this point. So, but now what do? We enter here, put our buy order in here, and let that bad boy play out. Boom, TP hit just like that. Just like that. And all we did, breaking it down again, like I said, we noticed that the market was moving in a staircase pattern. So, and we noticed that we were in a trend. What we did, went on the higher time frame, you go on the 4 hour, the 1 hour, whatever you want to do, gang. Whatever you want to do. But on the higher time frame, what do we have? We have a break of structure right here, right? Break of structure at these areas, at these highs. We broke the structure. We closed above these highs, right? Sweep of liquidity, break of structure. What's the next thing? Go to a lower time frame and look for the same thing because time is fractal. So what we are doing is looking for what we saw on the higher time frame on the lower time frame now, and then applying that. That is how you analyze the charts. You are just strictly waiting for something. It's not waiting for something. Yeah, it's essentially you are waiting for something to happen. If you don't see anything in the market or you cannot analyze the market, don't trade the market. It's that simple. That's how you make money. Most traders will get upset if they don't trade for a day, especially beginner traders. The best traders, they focus on not losing, not just taking the trade. They don't focus on taking the trade or winning the trade. They focus on not losing the trade. The only way you can not lose a trade is if you are strictly analyzing the market. You are in the charts. The way you get better at analyzing and figuring stuff out inside the market is what? Back testing. If y'all want a video on how to back test, Let me know down in the comments down below. But yeah, this is how you analyze the market. It's something quick, something easy. Yeah, if y'all have any other questions, DM me on Instagram, Discord, whatever y'all like to do. Join the Discord, follow the Instagram. God loves y'all, boys. Catch y'all in another video. Peace out, nigga.